Welcome to the midweek live stream. We will just be covering a few assets based on how the price has been developing. Just to give a quick review on what's happening with Bitcoin, the bull case which we discussed in the market over the weekend, that's most likely playing out, and we are building a triangle over here where it needs more time to fill this thing out, and we should be seeing a breakout happen next week. Now the reason I'm saying it's going to be next week is if you look at the 2-week candle, the 3-week candle, and the monthly candle, all three of them close in 4 days. All right, which basically means that the market is waiting for this closure to happen. And if you go on the IBIT ETF, this is something which we discussed over the weekend as well, that there are multiple closures happening this week for the 3-week candle, the 2-week candle, the monthly candle. The monthly candle is going to be like next week, it's not this week. And the 3-month candle, which is also going to be next week. But this week is more to do with the 3-week candle and the 2-week candle. Now, given that we have double inside 2-week candle forming on Bitcoin, that is essentially leading to some extreme compression over here. And whenever you see this compression happen the way it is forming on the 2-week chart, that technically does mean that you are printing a triangle in formation, which is most definitely the bull case for the market. Now, why exactly is that the bull case? The bull case is because we're not making lower lows where the market is defending the previous higher low in the market, but this is not technically a higher high. So you have this high over here, you have this next higher low. This is technically a lower high, but this is not a confirmed lower high because you have not made a lower low. Because we haven't made a lower low, this is not a lower high, it's just a high. All right, so this could be a potential higher low, but this is not a higher low because we have not made a higher high just yet. Okay, so that's leading to compression in the market, and that's something which is clearly visible when you see a triangle formation happen like this. Now, triangles in an uptrend, when you form them, they generally lead to a breakout, and that is why it's a bull scenario in the market, where the breakout which would happen next week or the week after that, it should likely take us to 115k at the minimum. The target for that one is a bit tricky to give because the compression has been for like 2 weeks, so it can be explosive as well. But the first target, I would say, is going to be 115k for that one. From there, we'll see what to do. But in the immediate term, next week, I would say when this triangle does break out, it should be 115k. That breakout, you could participate in it, but I would still wait for this week to be done with before you anticipate that you want to take a position in it. My stance has been pretty clear that this week I don't want to be engaging in crypto whatsoever. I want to give it time to develop, and I think we have given enough time for it to develop so far. So that's pretty much it for crypto. The FMC did not have much of an impact on Bitcoin, which was to be expected, and I think that was also expected on any risk on asset class, that the market barely did anything on the FMC meeting. So if you go on NASDAQ, this is looking like an inside daily candle failure which is being printed. Now, going into this week, everybody was like, fear driven on the fact that because we had a massive down day going into Friday with the Middle East escalations which were happening with Iran and Israel, we were calling for doom and gloom, and I think we were probably on point to do it. The market is going to shrug it off, and it should be going higher going into this week, where any war scenario, it's not going to matter, and it doesn't quite have an impact on the US economy. Like, it's just a buy the dip opportunity, and I think that's pretty much what happened. So I'm not sure if it's going to make an all-time high this week. Well, chances are very low that it's going to make an all-time high this week. But most likely next week we should start an expansion towards all-time high because we will be opening a new 2-week candle. And if you look at the 2-week chart on NASDAQ, you don't want to be going short on this market which is making higher lows with respect to every previous 2-week candle. Now, this may be just a compression. It does not quite mean that it's bearish just because the market is going sideways, right? And once we do close this 2-week candle, which will also be the closure of the 3-week candle, the next 3-week and 2-week candle which will open will most definitely be causing further expansion to the upside, and we should be taking out all-time highs. Now, once you do take the all-time highs out, I doubt it that the market is going to stop there. It will most likely keep expanding higher because of the amount of compression we've gone through ever since we took out this particular lower high, just this one. I had mentioned in one of the past live streams that this region between 22,277 and 21,000 is deadbeat. There's no resistance here. The market should not have any issues going till there. Now, the reason the market has not gone up in a straight line till there is because we already did go up in a straight line on like high time frame perspective. If you look at the quarterly candle, which will be closing in 12 days, this is called going up in a straight line, where the market has basically covered this distance 35% from the bottom in a period of like 1.5 months. Not 1.5 months, you could say like 2 months, give or take, 60 days. That's insane. Like it's borderline insane that you have covered this much distance in a very short amount of time. So it's okay to go sideways for some time after covering this much distance. Now, as you open more higher time frame candles, which would be like on the 2-week chart and the 3-week chart, the market would be catching up its breath and it should be looking to expand furthermore. Now, the higher time frames look pretty healthy to me. I don't see any issue with them just at the moment. It's more to do with like how do you close the quarterly candle. Now, if you close the quarterly candle, which it looks like this, there's no way the next quarterly candle like fades to the downside. Like if I were to remind you when the quarterly candle which closed back in October 2023 looked like this, which was like a bullish engulfing of the down candle. The next quarterly candle was like an expansion to the upside. That is somewhat what I'm expecting the next quarterly candle is going to do for NASDAQ when we do open it in July. Now, it doesn't have to carry out the entire expansion for the next quarterly candle in the month of July itself. It's July, August, September. So we have 3 months to expand it to the upside. There will be some kind of gyrations which will be happening in July, but July is also when we start the earnings season again, where the companies will be like reporting their earnings in the NASDAQ Tech Index, which would be like a major driver for the index to move higher. So that's something to keep in mind. Another thing which I wanted to like discuss, which is why I'm doing the midweek live stream, is NASDAQ is heavily correlated with Nikkei stock index. Now, this is something which I was not covering in the regular live streams for some time, is because I wanted to build comfort amongst people on how the live streams are going to work, on how the structure is going to work. But the truth of the matter is that I compare NASDAQ and Nikkei almost on a daily basis on looking at how the market structure is evolving. And what I have learned over time is that major swing points which do form on Nikkei, they have a very close correlation with NASDAQ's swing points as well. So say, for example, when this particular top was printed, which is on July 2024, it was this top in NASDAQ as well. So this yen carry trade blow off which happened, which drove Nikkei significantly down because USD JPY took a crash, that also had like a blowover on NASDAQ. So when NASDAQ bottomed, that's when Nikkei also bottomed, and we had a massive squeeze over there, which was this squeeze. So if you pay attention to the weekly charts, the way they're kind of expanding, this was extremely sus to me when NASDAQ made a new all-time high, but Nikkei did not. Okay, which was like telling me that there's not going to be much of a follow through going forward because Nikkei does not want to rally higher. And when Nikkei started selling off, like specifically if you go in here, like with this particular sell candle, which was on 17th of February, it was this sell candle here. Okay, and if Nikkei was going to sell off all the way down to like, this low, which was formed on August of 2024, then guess what? NASDAQ was going to do the same thing. And that was the area I was like looking at in the market. Because if Nikkei is going to sell off and it's going to go all the way down there, there was a very specific pattern I was looking on Nikkei, which is one of the reasons I went long on Nasdaq. So on the quarterly chart, we had inside quarterly candle, which had formed like this. And that low of the quarterly candle, the way it was being tagged, that is what the market was. That is what the market wanted to like grab in terms of liquidity before causing a reversal in the market and taking it to the upside. Okay, so which is one of the reasons when I opened the long position when I did in the long portfolio, that had more to do with Nikkei taking out the low for August 2024. And coincidentally, not coincidentally, but they both move in unison. Nasdaq was also taking out the low for the August 2024. And if the bottom had to be printed in global indices, it's because Nikkei and Nasdaq would be moving in unison since then. Now, ever since that bottom got printed and Nasdaq started going higher, it's also because Nikkei is going higher and it's not selling off. It's actually holding pretty well. And if the inside quarterly candle failure pattern is going to play out, then in the next quarter, when we do open the next quarterly candle, Nikkei will be shooting for these highs and then this high eventually, which would technically mean that Nasdaq has full reign to keep expanding higher. Because Nasdaq is always going to outperform Nikkei, because Nasdaq is the big daddy and Nikkei is the small brother in a way. But they both go together is the main point. Now, we can already see that, this particular top, which was on 18th of February, it was this top here. Nikkei is gearing to take out that high. Now, one of the reasons you could say is that, Nasdaq hasn't quite attacked this high yet is because Nikkei hasn't really rallied to attack its respective high over there. Now, my thinking is that it's getting very, very ready to do so. It's probably going to do it next week. And in doing so, Nasdaq will have the green light to go and attack its respective 18th of February high as well, which was from right there for Nikkei. Now, with the Nikkei chart, I would most recommend that you follow this ticker, which is NI225. That is the cash index for the Nikkei chart. On the cash index, Nikkei is already breaking out. It's not holding back. It's just the futures chart, which is not looking as good because, the futures chart is tied to the Nasdaq index. And whenever, Nasdaq sells off on the New York session, it affects the futures chart for Nikkei as well. But if you're just paying attention to what's happening on the cash index, which is it's only operational when the index is open during the Asian session in Japan, that's a pretty damn solid candle which is forming on the 3-week chart and on the 2-week chart, which will be closing in the next day or so. So this is a breakout in progress on Nikkei, where it is breaking out of this inside 2-week candle going higher right now. Now my thinking is that this breakout is likely going to target this area up top. So if Nikkei has roughly 3.5% upside, that technically means the Nasdaq also has 3.5% upside to it. That's a cross-market correlation you just need to be aware of, that the headlines, or at least the headwinds for Nasdaq, are at least 4% or 5% of the upside, because Nikkei has a 3.5% upside to it. And due to that fact, I specifically don't want to be short on any risk on asset classes with Nikkei looking to expand higher. And I think that I covered this thing in the channel where I mentioned that this resistance zone, which has been tested many times. Actually, let's look at the cash index for this one, where the cash index was suggesting that this particular resistance was tested 3 times and we were going to break out in like an ascending triangle fashion, and the breakout was in progress like yesterday. Now the breakout was not being reflected on Nasdaq because we had FOMC meeting today, and the market was not going to move on FOMC meeting for Nasdaq if it is going to be bullish, because everybody wants instill fear, doom, and gloom, especially when Powell is supposed to take stage, and he did not say anything, which was bearish, which is why the market did not react to it. Like market closed pretty much flat on the day. If there was going to be anything bearish, you would have seen 1% downside on Nasdaq or 1.5% immediately. The longer term outlook does not quite change on equities, which is liquidity is increasing in the system and things are going to break out. Now, liquidity increasing in the system is actually being reflected in Nikkei very nicely. And since I already showed you that Nikkei has a 100% correlation with Nasdaq, that is definitely gonna get reflected on Nasdaq in the coming days or even the next week. It's almost immediate. It doesn't have much of a time lag to it. The only time lag aspect I would mention is that because we had an FOMC meeting, there was not much of an immediate impact on Nasdaq. But whenever you see Nikkei going up 1% or 1.5% overnight, it's almost always guaranteed that the move is going to get reflected on Nasdaq the next day immediately. Which is one of the reasons the trade deal between Japan and US was such a significant driver, more than China for me personally, because I know that has an impact on Nikkei. So if Nikkei was selling off this sharply and some Japanese hedge fund was being taken out to the woodsheds, that was having a spillover effect on the US indices as well. And that is something which not many people know about, and very handful of people. I discussed this dynamic with Mia in the past year or two, where I've been tracking the Nikkei index and seeing how it gets reflected on the Nasdaq index. So whenever you have some kind of a pattern which shows up on the Nikkei index, and if it's gonna break out to the upside, that almost always means that you will be seeing the same breakout happening on Nasdaq, irrespective of whatever pattern is on Nasdaq. Okay, so that correlation is very important to know about. And another thing which you need to be aware about is that Nikkei index is heavily influenced by USD/JPY, which is this one. Now, when I say it's heavily influenced, it does not technically mean that they are correlated, on a price structure basis. I'm not trying to say that because Nikkei is rallying, USD/JPY has to follow it tick by tick, and it should be on a market structure standpoint, it has to go in a similar fashion on how Nikkei is going. So let's say when this bottom did get printed, it was this area on USD/JPY. It did keep going down, but Nikkei did not go down. Nikkei bounced and it went sideways. So it waited until USD/JPY was done with the selling. And when this particular bottom was printed on USD/JPY, which is this one, on this date, on 22nd April, this is the date, 22nd April, you see this hormonal rally on Nikkei. That's because USD/JPY joined the party and was going higher. So in essence, when the trend on USD/JPY is gonna go higher, that will get reflected to Nikkei getting a pretty significant boost to itself. And if Nikkei is going to get a boost to itself, that will get reflected on Nasdaq. So this is a circle formation in the financial asset correlation, where how FX gets connected with the index markets. And this is how the money flow kind of goes throughout the entire financial system, at least in my mind, the way it goes on how I've been following it. Now, we know for a fact that there is a pattern in play for USD/JPY, which is the inside monthly candle. And it hasn't attacked the downside liquidity. It hasn't attacked the upside liquidity. My bias is that it will actually go up. It will attack the upside liquidity. And in doing so, if this distance is going to get covered in USD/JPY, that will provide an extra jolt to Nikkei to actually go higher as well, and go to the final target of 40,422 on Nikkei index, which would mean that it's going to be a risk on scenario for Nasdaq index as well, based on this correlation. Now, what happens after it tags those targets? we'll worry about it later. But in the meantime, your job is to make sure that you don't try to short the markets just because of some news headlines flowing around with the war breaking out or whatnot. Yes, there will be like gyrations in between on like a daily basis, like whenever that news headline does come in, but that recovery is going to be very, very swift. And you're not going to get much of a dip out of the market whenever like you see that downside happen in the indices. So I guess this is the only stuff which I wanted to cover in the midweek update to showcase on how like whatever move transpired on Nikkei last night, it wasn't quite being reflected on Nasdaq index, which has been mostly been sideways because Nasdaq was like just waiting for the FMC to be done with. And there is another event which is happening this week, that is the OPEX. OPEX is like the quarterly OPEX, which happens on the on a calendar basis. It's the third week's Friday at the end of every quarter. So this week it's Friday, which is the 20th of June, because we end the quarter next week, right? So on the third week of the last month of the quarter, you have an options expiration where trillions of dollars worth of options, they are set to expire. And those option expirations, when they do expire, it tends to have like a pinning effect on the indices where they don't quite do much until like this date is done with, which is Friday, this one. Once this date is over with and the options have been expired and institutions are going to be opening their new option plays for the next quarter, that's when the movement starts happening. And I think this is very much highlighted on the futures chart. So if you go on the futures chart and you go on the daily chart itself, you will notice that there is this symbol which shows contract switch. Okay, these contract switch windows is when the OPEX is supposed to happen. So the last OPEX was right here. Like it was supposed to be on Friday, which was for 18th of March. So January, February, March, this is the third month of the quarter. On the third month of the quarter, of the third Friday, the third week of that month in the quarter is when the OPEX is going to happen. So once the OPEX was done with, that's when you started seeing like this massive move in the market. Now, prior to that, if you look at the prior contract switch, which happened over there, that was in December. And after December's OPEX transpired, you had a downside move happen in the market. Essentially, you never actually went higher or above the OPEX window when this was printed all down. Okay. But you did go higher in this area after the OPEX was done with. So this area. So this was like forming resistance. And once we clear the resistance, it was like a massive short squeeze the market had to undergo. And we're almost going to be touching all-time highs just because of that. Prior to that, if you look at the markets, there was this OPEX window, which the market unfolded. And from this OPEX window, market was like in a straight line just going up. So this is also part of the 6-week cycle, the way you would put it, like how Miad puts it, but that's more to do with the FOMC meetings. The OPEX happens for the contract switch once in 3 months, okay? So it's more to do with 12-week cycle. Let's just put it this way. Okay, so on a 12-week basis, the contract switch which happens in ES, and those contract switch is like mentioned on the daily chart, just like that. That has some sort of impact on the markets, as like the current markets are very much driven by highly liquid option contracts on the indices, and that has a very significant impact on the movement in the indices. So whenever you're approaching one of these days when the contracts are just going to happen, you need to be sharp. You need to be sharp in a way that pay attention to how the market structure looks like, because if the market structure breaks in this case, you need to get out and cannot be sitting in the market due to that. But at the moment, the market structure is very much intact. Like, how do I mean the market structure is intact? I've covered this thing in the weekly live streams that ever since this bottom, we have been building higher lows on the weekly chart where none of the previous week's lows are being taken out. Now, this week is not an exception, where the reason I'm mentioning this inside daily candle failure is because that has a potential to be the low of the week, and we just had the FMC meeting. So if this is going to be the bottom for this week, and we're going to extend going into the next contract, which gets opened in the coming week, you're not supposed to go below here. Like whatever this low was on last Friday, that is it. Like you cannot break below that. So if the market was supposed to collapse, like let's just say if Powell had to collapse the market, it should have happened today. It should have gone down like 2-3% or like 2%, whatever it's supposed to be, because there's no catalyst in my mind which can like break the market structure besides the FMC meeting. Like Iran-Israel talks, or like the warfare which is happening between them, that did not collapse the market. Okay, so that's like a priced in thing. The FMC could have done that, it did not do so. So if there is no catalyst which is potentially crashing the market, then the current regime, which is like, the higher low regime, is intact. It will stay intact and it will keep expanding and will like take the market to all-time highs. So that is the base case scenario you need to stick with. So in that case, you need to be paying attention to any of the bullish setups which do form in the market. Like say, for example, I entered long position on DAX because that is a bullish setup in formation where the key pattern in play is the 2-day candle failure. Now, it's not technically a failure yet because the 2-day candle closes in the next 23 hours. But if you have paid attention to any of the webinars I've hosted, you basically are supposed to open in long position when it's creating a daily SFP at the lows. This is a daily SFP. Okay, that's the definition of the daily SFP, where it's failing to close below this liquidity pools which have been attacked. So I'm in a long position. It's that plain and simple. On my stop loss is a bit wide one because I was waiting for the FMC meeting to be done with. But let's just say if this thing starts expanding going to tomorrow and day after, I will be happily moving that stop loss down above here, going into like this low. But I'm not gonna do it right now. Like I'm still like keeping my stop loss down here at the moment, like to 23,000. It's not being moved yet. But if we do start seeing expansion and the market structure shifts on low time frames, then I'll be happily like moving the stop loss. At the moment, I'm just waiting for further price action to develop. All right, so that was it in terms of like what the midweek stream is going to cover. Any questions so far on what we've discussed? I promised I would keep this one quick and simple. Hopefully this was quick and simple. All right, sounds good. No questions then? I'll let you guys be because I suppose it's late in Europe at the moment. It's 3 p.m. for me, so I have all day. Alright, seems like everybody's well settled on the ideas. I will catch you guys on the Sunday's live stream. We have officially covered the entire month since I launched the live streams. So just do me a favor, guys. I have sent messages in DMs to you asking for feedback on how I've been doing the live streams, how the structure is, and any improvements you would like to see. If you have any suggestions, my DM is open. Please reach out to me and I'll be happy to implement it for the second month as we transition into it. And for people who have like handpicked to like get a feedback from, please do make sure to check your DMs because I think it does not quite notify you if I'm not a friend or like if you're like, your setting is disabled in that case. For those who are like, been attending the live stream since the moment I launched it like a month ago, I reached out to those people to give me some feedback on how they are finding the service so far and what changes they might want to see going forward for the second month. I'm all ears for that, so I'll wait to hear from you guys. Until then, I will see you on Sunday and we will go for the 5th episode. You're welcome, Richard.